And welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani. It's getting down to decision time on a Bitcoin ETF. Let's talk to a man who has an application in front of the SEC. Jan van Eck is the CEO of Van Eck. He's joined by Todd Rosenbluth, Director of ETF and Mutual Fund Research at CFRA. Jan, there's more than a dozen applicants for a Bitcoin ETF, but SEC Chair Gary Gensler has signaled his support for a Bitcoin futures ETF. He seems pretty cold to a pure Bitcoin ETF without clear regulatory control over entities like the Bitcoin exchanges. Can you handicap this at all for us? How is this going to play out?
Well, I wouldn't say there's a zero chance of a Bitcoin ETF approval. The deadline for our application, and these things can be extended, but this is an unextendable deadline by statute, is November 14th. So between now and November 14th or the Friday before, we'll know whether the SEC will approve physical Bitcoin ETFs or not. I would say that in the space, we launched the first pure play sort of cryptocurrency company ETF called DAP in April of this year. So I just wanted to make sure that people know that we do have a product in the market. But as far as regulatory approval, I do think as well, the SEC wants to have some visibility into the underlying Bitcoin markets. And I think they've got that a little bit when they asked Coinbase or told Coinbase not to list a product that gave interest on crypto holdings, and Coinbase backed off. So they clearly have some control over players in the underlying Bitcoin market. So maybe that increases the chances from zero, but I have no idea what they are.
Okay, so we now know November 14th is sort of the drop dead date for a Bitcoin ETF. Thumbs up or thumbs down. But what about Bitcoin futures? You've got an application for that as well. That's going to go live at the end of the month, I understand, unless there is objections and they kick the can down the road. What are the issues around a Bitcoin futures ETF? Can they kick the can down the road even on the Bitcoin futures at this point?
Yes. I mean, let me, at least from an investor perspective, and this is not regulatory, the issue with the futures ETF is the dynamics of the futures curve. And without getting complicated and talk about contango too much, in Bitcoin rallies, Bitcoin futures strategies can underperform by even up to 20% a year. So that's a pretty big number. The regulatory issues around it are, can U.S. ETFs invest in Canadian Bitcoin ETFs? That seems unlikely now. That's one issue. And the other is that there are limits on how much any fund or fund company can own in Bitcoin futures that's based on the futures contract. So what if the Bitcoin futures ETF gets too big? So there are still issues out there that might cause the SEC to delay approval.
Yeah, 20% underperformance is pretty significant. Todd, we don't have a Bitcoin ETF, but we're getting a raft of Bitcoin-related ETFs that are sort of buying companies around the crypto space. Last week, Investos started trading 2 ETFs that can own crypto-related companies and even Bitcoin indirectly. Now, tell us about this new issues by Invesco, SATO, clever. They've attempted to partially fill the gap by launching the Invesco Alerian Galaxy Crypto Economy ETF and Sato as well. Tell us about that. What's in that?
Yeah, first of all, these are 2 of the longest names of ETFs that are around. But what they're owning are companies that are exposed to this overall trend of either crypto or crypto miners or other companies that are exposed to it. So Coinbase, for example, MicroStrategy being another one, Square, as well as you mentioned, they own a trust that owns exposure to exactly what we'd find of Bitcoin products listed on other exchanges in Canada and in other markets. But as you mentioned, there's a growing number of these products, and Jan touched on one of his, DAP, DAPP. We've got BLOK, which is more blockchain related. We've got Bitwise with a product BITQ. We've got Global X with a blockchain related ETF. There's a lot of these products that are trying to fill the gap because we don't have a physical Bitcoin ETF. And it's possible, in fact, we think it's likely that we're going to see a delay of a Bitcoin futures ETF until 2022, until the regulatory environment is more clear and they line up all of these potential products to start at the same time instead of giving a mover advantage because they filed one day earlier.
Yeah, I want to know that SATO, the new Invesco ETF that started trading last week, is 15% invested in the PowerShares Cayman Fund, which is, I understand, a Bitcoin fund. So indirectly, these funds are getting exposure to Bitcoin one way or another. I find that very interesting. Going back to the regulatory environment, Jan, Bloomberg was reporting at the end of last week that the Biden administration was considering an executive order to coordinate regulation of cryptocurrencies and maybe even appointing a crypto czar. Is that where this is going? There's obvious, confusion here on jurisdictional issues.
Look, what's happening in the crypto space, the development of all the software solutions and applications is unbelievable. And it's a huge challenge for the regulators to keep up. I see blockchain competing against stock exchanges, against brokers, against payment systems. You now have Twitter accepting Bitcoin payments. So the level of innovation and the speed is unbelievable and very difficult for the regulators to keep up with. So I envy them, but some kind of high level like FSOC or czar, I think has a lot of trouble. I think the bread and butter is going to be the work with the agencies that are already staffed, like the CFTC and the SEC, and the banking regulators, of course.
Yeah, it just seems to me there are some very obvious jurisdictional issues. The SEC says a lot of tokens are investment contracts, and that falls under their purview, but that's not entirely clear. Gensler's also said he's reluctant to act on a Bitcoin ETF without regulatory control over the crypto exchanges. Who's going to give him that? So you seem to make the comment earlier about Coinbase and their a power grab is not the right way to describe it, but nobody gave them the jurisdiction. They basically went to Coinbase and said, no, you can't do this, and they backed off. So essentially they have de facto jurisdiction here without anybody clearly granting it to them. And that, you think, is what's going to happen, Jan?
Yeah, I mean, I think it's, boy, they would never want to think of it this way, but it's kind of a light touch regulatory approach. I mean, it's really, if you took the SEC at its word, it's very unlikely that all the cryptocurrencies listed on Coinbase and Gemini wouldn't be considered a security by their definition. So if they just require them to register as broker-dealers, that gets them jurisdiction. And look at Robinhood. I mean, Robinhood is a regulated broker-dealer, and they're listing and trading and offering all kinds of cryptocurrencies. So that gives them a direct nexus to those exchanges if they're looking for one.
So before I move on to, and I want to talk about ESG a little bit with both of you, November 14th, Jan, you mentioned the drop dead date for a thumbs up or thumbs down on a pure Bitcoin ETF. Is it really a thumbs up or thumbs down? If they say no, what happens after that?
Well, I mean, their prior concerns are that it's not a deep enough and it's a potentially manipulable underlying cash market. And if they take that stance again, then it's a deep freeze. If they give another excuse or reason to deny the application, I can't imagine what it would be, but that would be interesting, and everyone's attention would pivot to that. But again, my main point is the disruption investment in all this stuff is happening globally in a ton of different cryptocurrencies. Kind of Bitcoin is almost old school at this point.
Yeah. Well, that's why I think it's so important to clear up the regulatory and jurisdictional issues. If they tell them, okay, this is a security, these coins are securities, and the SEC will now have jurisdiction over this area, then they can make a clear ruling. I can't imagine him, given what he said, approving a pure Bitcoin ETF without the regulatory control he's seeking. That's why I think the chances are they're actually going to decline on November 14th. The futures are different. I think there's a very good chance they're going to approve that. It's just an unfortunate situation. Congress is bottled up dealing with the Biden agenda right now, and it's a lot for them to ask to, create a whole new regulatory regime and approve that. I just think it's going to be tough. Let me just move on, Todd. Ask you this. A record number of ETF launches are happening this year. It's amazing. Thematic investing, ESG, we talked about crypto. There's a lot of fixed income ETFs coming out. But I want to go back to ESG again, a subject you and I have talked about for many years. There's a whole raft of them just recently. Are these just copycats, or is there some new innovation in ETFs happening right now? Handicap this for us right now.
So we're seeing, yes, an explosion in the number of ESG-related products. We're also seeing growth in the amount of money that's going into these products. So there's more supply right now than demand, but the future looks great, we think, for ESG-related products. And we're seeing companies take existing products that are quite popular and offering ESG versions of them. So EFIV is the State Street product that is a version of SPY, the S&P 500 ETF. We've got EAGG, which is an ESG version of the AG from iShares. We've got EMNT, we're showing on the screen here, from PIMCO, which is a version of their very popular active short-term bond ETF, MINT. We think we're going to see more of these products. Invesco has filed for an ESG version of the triple Qs, we think is likely to come out by the end of the year. And as I think we'll talk about, Jan and his team launched a ESG version of their popular MOAT ETF. This is just a trend that's likely to be here for a while.
Well, let me pick up on that, Jan. You, as Todd mentioned, you've got a new Van Eck Morningstar ESG MOAT ETF. We got to change these titles. MOTE is the symbol. These are companies that Morningstar believes possess long-term competitive advantages or moats that have been screened for ESG risks. And we've got Alphabet, Microsoft, Applied Materials, ServiceNow, Salesforce, very familiar companies in the ESG space right now. What do you think you can add to this whole ESG story?
Well, we try, I like to say that we offer ETFs like handcrafted beers. We take everyone, on its own merits, and we don't have a blanket ESG data or approach. But on the Morningstar, we think it's an extremely strong offering. Morningstar acquired Sustainalytics, which is one of the leading ESG research shops, and we've been working on this for quite a while to apply, the MOAT investing philosophy, which is investing in companies with a competitive advantage, and then doing this Sustainalytics ESG overlay on that. Unlikely to include fossil fuel companies, and so really what I think people expect from ESG. It has more of a growthier flavor than the traditional MOAT fund, so it'll be interesting to see what people think of it.
Not to get all philosophical on you, but I was talking to you earlier, and you mentioned you'd read Bill Gates having a book out on climate change that you read this summer. And the message seems to be, and I haven't read the book, but based on your takeaway, that we need a lot of change. And I'm wondering, is there any amount of ESG that really is going to make a sufficient difference? Gates seems to imply we need some really radical change, not just ways that we're screening, companies.
Yeah, look, to radically oversimplify, which I like to do, there's 6 billion humans on this planet, and we're messing the planet up like crazy in a lot of different dimensions. And I think I like it because he wrote it at what I call a high school level, which was perfect for me, to understand all the different things that we need to do. Energy, production, of course, is something that we focus on, transmission, vehicles, transportation, but also like agriculture. Agriculture is responsible for about a quarter of all emissions. So without a lot of technological innovation, it doesn't matter what the government does, and a lot of times it's counterproductive. We're not even going to get there. So I think ESG is good as a coherent investment approach on a fund-by-fund basis to make a difference. And it's good signaling, but to put it in perspective, it's not going to change the end result of where we need to be.
Yeah. Todd, you mentioned that there's an ESG flavor for everything now. We have an ESG version of the S&P 500. We have an ESG version of the bond funds like the PIMCO fund. You mentioned Invesco has filed for an ESG version of triple Q at this point. And I guess I get the same question to you. How much of a difference is this really going to make, given that we still end up owning substantial parts of the same companies. Triple Q, ESG Triple Q, you're still owning a ton of Microsoft and a ton of Apple and a ton of NVIDIA.
Right. So there's a few different ways we're seeing ESG. We're seeing broad ETFs that offer exposure to companies that are doing well from an ESG perspective. We're rewarding those companies that are relatively strong. We've got ESG where it's more clean energy related. You're investing in companies that are trying to help solve the energy crisis that we're in and making clean energy become a priority. So ETFs like ICLN would be an example of that. And then we've got a couple of other different related ETFs. So VOTE, VOTE, which I know you've spoken to them beforehand, which is actually working with companies to make changes to the ESG priority. And I would just slip in one last one. A product launched last week. The ticker is PINK, PINK. And it's a healthcare-related ETF from Simplify, and it's giving all of their proceeds and all of their profits to the Susan G. Komen Foundation, so to be able to help fight breast cancer. That's more of a societal benefit, but that's a good thing. That's different ways asset managers are working to be able to tap into the ESG trend. Yeah.
So just going back, Jan, to what we were talking about before and your interest in real climate issue and ESG in general, are companies really moving on these ESG issues? I know we've got this nice ranking that we keep doing, and I know we've got Tesla out there. They're developing and building green technologies that maybe could power the future. They're doing hydro, solar, wind, geothermal. They're talking about it, and so is and Elon Musk is talking about it. But is everybody else doing it on a sufficient scale that's making a difference at this point? I'm asking a philosophical question, not an investment-related question, but I can't help but think about that with this ESG story.
Yeah, I mean, look, I think where the real lift is going to come is through breakthrough technologies like rice that needs very little water to grow, or other kinds of dry farming solutions as one example, right? There's lots of different kind of technologies. So you want to own, like Todd was saying, some of the companies that are really investing in having those technologies. That would be number one. Number two, there's a lot of companies in the middle that are they're going to try to do the right thing, but they're not going to really change the curve on climate change. And then there are the orphans, what I like to call what about fossil fuel companies? They're going to be like the old tobacco companies in some kind of, investment purgatory. So, it's really the technology companies and technology investing, whether privately or with public companies, that's going to really bend the curve here, I think.
Yeah, it's really biotechnology. You think about it, rice that uses less water. I mean, that would significantly, that's a green revolution right there. I just got back from California wine country in Santa Barbara and Paso Robles and Monterey, and boy, they could use some grapes that can withstand drought. They've got some very serious drought issues there, and the wine industry is trying to cope with that and develop new techniques like dry farming that are sustainable and that work, but they're entering 3 or 4 years of drought, so it's a serious issue that we've got to address. I'm going to have to leave it there, gentlemen. This is a fascinating discussion. That does it for this week's ETF Edge. Thanks to Jan and to Todd, both old friends of mine. We've asked Jan to stick around and chat more about the commodities boom, which he's an expert in, one of the great experts in the country, for the ETF Edge podcast. And remember, you can see all of our videos on our website, etfedge.cnbc.com. Everybody have a healthy, happy, and safe trading week.
Get the ABCs of ETFs with the ETF Edge newsletter, your weekly update on the hottest trends in the nearly $4 trillion market of exchange-traded funds, expert analysis, actionable ideas, and exclusive insight from host Bob Pisani. Sign up now at cnbc.com/ETF Edge newsletter.